James, Henderson Opportunities Trust, perhaps if I can start by asking you, what does it do? What's its objective, in other words?
It's a capital growth trust, unashamedly capital growth. We want to not just beat the index, we want to beat it by a long way. And we do that by not being encumbered by the index. We're buying stocks that we do believe will be bigger companies, substantially bigger companies over the coming years. We will buy large, medium or small companies wherever we find the potential. At the moment, I'm finding quite a lot of that potential on AIM. So a third of the portfolio is in AIM stocks.
And presumably it's a UK bias to the portfolio, it's a UK investment.
Yes, it's totally UK. The reason for that is there's so much opportunity in the UK. As I say, buying AIM stocks, there are probably 800 companies that I might invest on in AIM. That's before you look at companies in the all share. So that's about 1,200 companies in all in our universe. If we can't, and there is wonderful value amongst those 1,200, it's just finding them. Some very strong growth stories will emerge out of that universe. I don't need to look anywhere else.
And what's your investment style?
It is out and right capital growth. We believe that technology and industrial companies are where there is some real opportunity at the moment. There's some very exciting things happening in the UK, and it's finding those and putting them in the portfolio.
Now, you mentioned the size of the companies there can be the smaller companies, perhaps those that are newer to the market. Does that bring with it an additional element of volatility or risk for investors?
Yes, that's why we run a relatively long list. I'm trying to play to all the strengths that HOT has. HOT is a relatively small trust at around 80 million. That allows me to buy these smaller companies and make them count. And when the valuation plays out and it becomes more highly valued, I can sell that company. That's the flexibility of running a small company's trust that is actually quite a small company.
But there's some big players in there as well. I mean, ITV, for example.
That's right. I'm not just buying small companies. I'm buying businesses can reinvent themselves. ITV has reinvented itself into a much better business than it was a few years ago. And you shouldn't be worried about the size, whether it's big or small. It's whether there's really a growth story there.
And how long would you typically hold a company for?
Well, 3 to 5 years. We believe that in that period, the story, the growth should come through in that period. We are not wedded to a company. We will reduce them when they become 3.5% of the portfolio and look for the next growth story.
And finally, James, obviously you're working on the portfolio, but you have a co-manager who works with you too.
Yes, me and Colin share working on the portfolio. Colin sees a lot of companies. There are a lot of companies coming to the market at the moment, and Colin will see most of them. You have to remember, Colin has been looking at smaller companies now for 40 years, and he brings a huge knowledge to looking at them. I look at large companies and I buy some of the bigger companies for the portfolio. I'm also looking at small companies. So I think between us, we hope to find those good stories among our universe of 1,200 companies.
James, thank you very much.
Thank you.